Good evening, traders, and welcome to 2017 Price Action Trading School questions and answers for lessons 25 to 30. So we are actually giving a bit of push of Price Action Trading School because in February, probably, I mean, it's 99% certain during mid-February, we will start with Wednesday live trading based on our Price Action Trading School. So get prepared for that. We still have some lessons to cover, and then during the mid-February we will start on Wednesday live trading sessions, and I'm slowly preparing all the material that I need for live trading. So I'm actually analyzing markets. We might do some exotic pairs too. So let's see what we will have, and I guess in next 20 days or maybe earlier you will see my webinar schedule for Friday. Okay. Okay, guys, let's cover our risk disclaimer first, and then I will start answering your questions. Also, guys, if you have any questions, you can ask me now live, because I received some questions on my email. But also, if you have any questions, you can ask me now, and I will reply. So here, the first risk disclaimer is explaining that CFDs and Forex trading are leveraged products and can result in losses that exceed your deposits. So they are not suitable for everyone. Ensure that you fully understand the risk involved, and this webinar is for informational educational purposes only, and it's part of .com website. So let's start with questions and answers, and the first question, Sean is asking me, what time will the live trading be in the US market or European market? Well, Sean, I guess because I know that there are also a lot of traders from US that are following me, so I will try live trading probably during a cross session, Europe and US session. So probably around let's say 1 to 2 GMT time. Yeah, probably around that time when market is also active. So I guess it will be around the 2 GMT. So yeah, it will be also early for US traders. I was also thinking about making those live trading sessions during European session, but then people from Asia and people from US will miss it. So during probably during the first month, I think it will be during US session. Yeah. So the basic principles that will cover our live trading are actually those principles that we have learned through our price action training school. So we will be focusing on POC zones as we do in session recap. Okay, so we might still have some pending orders if our market orders are not filled during a live session. Also, we will cover master candle breakouts. Maybe there will be some counter trend scalping also, but most of the time we will be covering trend trading with POC zones. Of course, I would also go with high volatility Marubozu candlesticks if we get the opportunity. But let's see. Okay, we will cover that also. That live trading webinar will not just be about me talking about setups or making some positions. Also, you will be, of course, you will be asking me questions about potential trade setups. Okay, so about everything related to current market conditions and trading. So I hope that there will be a lot of people attending that, because we will really do some nice trading stuff there. Also, guys, okay, yeah, Christian is saying good afternoon, and all. Good afternoon, Christian. And Sean is saying awesome, great. Yeah, definitely. So the first question, how to determine high volatility? That is the question that I received on my email, and there are actually a couple of traders that asked me how to determine high volatility. Well, let me show you guys. First of all, in order to determine high volatility during intraday trading, we need to use 1 hour time frame, guys. Okay, it's pretty much obvious. This is USD Chinese yuan. Okay, this is forex pair that moves a lot. Watch this, guys. Okay, watch this. ATR of last 7 days, we will always use 14 days. So you need to also change it in the settings. But yeah, after we finish with price action trading school, you will also get a template that I will be using, so you could use it too. Okay, so watch this, guys. ATR calculator. Okay, here 14 days period. Watch now. 700. Okay, let's see if this is loaded. Yeah, 735 pips. Average, guys. Okay, was 270. Today 735. That means that next day this ATR for the last 14 days will jump. This is a very, very fast moving pair. It's absolutely connected to Chinese equities, guys. So whenever you see China news or whenever you see Australian dollar news, know that dollar Chinese yuan will move. Now, related to the question how we can determine high volatility, simple as this, guys. This is high volatility. Okay, this is high volatility. Now, we can also observe high volatility candlestick here. This is high volatility candlestick. So, according to our rules, we would actually place a Fibonacci retracement from here to here. Now, we should see some rejections if it happened from 61.8, 78.6, or 88.6. So the price should go, in my opinion, here, and then we would probably try to sell it. Of course, this is just an example of how high volatility looks like, but this is how we can measure it. We can also take, now this is not per our trading rules, how to trade high volatility. But guys, this is very obvious. If this is high volatility on this setup, it's dollar yuan again. Here we can see clearly that L3 level is the top before this gap. Of course, this pair will show a lot of gaps because it's connected to equities a lot. So here you see a gap, here L3, EMA, okay. So what I would do also is, we can also determine high volatility by doing this. So what I would say is that if price gets here to this point, I'm also thinking about placing a pending order here. That should be valid for next couple of days. Short sell. Because this is high volatility, a lot of candlesticks to the downside, 735 ATR pips today from high to low, guys. Huge movement, and this is high volatility, straight downtrend. If this low is not broken, well, then let's see if we will get some retracement towards L5, Confluence with order block here. So I would probably say we could sell it at 78.6. And if this had happened, okay, if this happened on our and during our live trading session, I would definitely tell you to place a pending order here. So you see, guys, I mean, there should be a nice setups in overall trading because if we don't see a setup on this pair, we will see a setup on another pair. So don't worry, just do it as I say, and you should be on the safe side of the market. So primary high volatility is determined by Marubozu candlestick, as I already explained in Marubozu, in high volatility Marubozu webinar. But also do your own judgment. Because if you see this, well, you know that definitely this is high volatility. Guys, 735 ATR. It's huge, huge, huge. It's much higher than any other Forex pair. I mean, at least that I follow. I might be following this even closer than I have ever done before. And maybe, not maybe, but definitely in the future, I will do the analysis of dollar, Chinese yuan to trade, guys. No one is doing that. I really don't know if people follow this pair, if they are doing this analysis, but it's very interesting for me. I've been observing it a bit, and I think that I will also start to follow it more closely. Okay, next question live. Shazad is asking, in bullish and bearish wool waves, how do we know which one it is? Is it a bullish wave when trend is up and bearish wave when trend is down? No, Shazad. Actually, I explained it last time. Those waves are different. Here, for example, you can see you need to follow the rules. Okay, Shazad. In wool waves, I can say there is no bias for sorry, for bullish or bearish. They simply show up on the chart. So you see, last time I said bearish, bullish wool wave. This is bullish wool wave. This is great bullish wool wave, strict bullish wool wave, because 0.4 is in between 0.1 and 0.2. So generally market on dollar Swissy was up here, right? It was to the upside. So if you see a bullish wolf wave during uptrend, then it will be much more significant than if it's a bearish wolf wave during uptrend. Because, I mean, you can trade both, but have in mind that this could have been a breakout trend trade, because obviously dollar Swiss was in uptrend. And here we got a signal. Actually, the signal was here. I always, and like 90% of the time, I do trigger happy trades when 1 to 3 trend line is broken. So here we have a bullish wool wave that actually hit our estimated price at arrival. The thing is that this is uptrend, and here, well, it went to the upside, okay? And of course, because the pair was in uptrend, bullish wolf wave was acting in trend direction. Now, for example, if we had seen a bearish wolf wave, we would have treated the trade as a counter trend trade, guys. Okay? In that case, that would be a retracement, counter trend trade. So you need to actually distinguish between those two important things. Another question, guys, is Christian is asking, can you please send me your wolf wave indicator? Christian, there are some free wolf wave indicators out there. Unfortunately, this one is not my proprietary. I don't have MQ4, and it's connected to my account, so it's not free. But you can also find some free wolf wave indicators, and if you are not sure whether your wolf wave indicator is working good or is it correct, just send me an email with screenshots, and I will ensure that wolf wave is either correct or wrong. I will tell you that if it's a good or bad indicator, but unfortunately this one is not to be shared for free because it's paid one. Okay, so that was the answer to your question. Okay, let's go with next question. Can you identify high volatility in other time frames? Yes, one more thing, Christian. I will use this indicator, of course, in our price action trading school live trading. So if I see a good setup, I will announce it live. So don't worry. Can you identify it on other time frames? So the question was connected actually to high volatility. Well, I mean, we can identify it, but I don't trade it personally. I don't trade it. I prefer 1 hour time frame for intraday assessment of that important movement. So for me, 1 hour time frame is excellent for intraday. So I really prefer to watch intraday movement, really intraday movement with 1 hour time frame. So I don't use other time frames. I mean, we could use maybe 4 hour time frame and other, but I don't use it, to be honest. Okay. Now the question is, do we take every single setup that we see? Of course not, guys. We don't take every single setup. We are human traders, right? We are not robots. So because of that, we cannot take every single opportunity that market has been giving us. It's not good. I mean, sooner or later we will start to lose. So that is why I really don't do that. Okay. I prefer really to assess every opportunity, and then of course when I see the opportunity, I announce it, of course. So yeah, that was the question, of course. Wait, just give me a few seconds. I lost my chat screen here with Citrix. I cannot see questions tab anymore. I'm not sure why. Give me a few seconds and then I will proceed. Okay, I don't know why. I don't see questions tab. Actually, somehow I lost it here. But definitely I have questions prepared on my PPT, but I'm not sure why I lost questions on Citrix, really. Very strange indeed. So next question is, can we use high volatility during day trading? Absolutely. The question was, I mean, if you trade during intraday, if you're an intraday trader, then I advise you to use it. Don't take every opportunity market is giving you. How I do it? Very simple, guys. First, I observe the trend. So let's say I see dollar Chinese yuan trend. For me, it's clear that it's a downtrend. So what I would do, I would note this pair down, and I would wait for the price to actually enter the zone, and then I would sell it. That is how I do it. I don't trade pairs that with high volatility that are not trending. So the primary prerequisite for trading these kind of setups is trend. We need to see the trend, guys. If we don't have a trend, well, we don't have also a valid high volatility setup. Okay, so that is my answer, and that is what I advise you guys also. So we don't do that. Okay, only if we see a valid setup, only if we see a big movement, nice movement, only then we can trade high volatility. Non-trending pairs are not to be traded. Okay, remember this. Non-trending pairs are not to be traded. Okay, so next question, when and how to search for entries? Well, guys, it's a bit subjective question. when and how. I mean, I cannot, I'm teaching you to fish, right? So I cannot tell you how to search for entries. I can give you guidance how I do it. First of all, I want to see if there was some nice fundamental news that can move the price pair in some direction. Then I watch for historical buyers and sellers. Then if I see some trending movement during Asia session or previous day, then before London, I put a pair on my radar. When the pair starts to move, I assess if trend is still valid. If the trend is still valid, then I might opt to trade it. So the primary thing is I mostly and most of the time I search for trend-based pairs that can give me trend-based entries. That is very important for you guys. Very important for you. Okay, the question tab is now back. Okay, here guys, so I can see the tab here. So you search for entries only during trend. We will have a webinar concerning when to trade and what to trade. So my primary rule is trade and search for trend entries. If I miss a trend entry, then I go probably with scalps, but also in trend direction. If I miss scalp trade, I might go for breakout trade, because my breakout trades are independent of any other trades. I usually take it as a second position. And if I must miss everything, then I really want to see historical support and resistance. If I see a good historical support or resistance, then I might opt for counter trend opportunity. But we will also cover that in one of our webinars. Which entries are the best? Of course, trend-based entries, guys. Trend-based entries are the best because big fish is making the trend. Sharks, market sharks are making the trend. And you are a small fish that hunts shark remnants. So you need to follow the shark, you need to follow big fish, you need to follow the top of the food chain in Forex market, and only then you can be successful. In my opinion, that I really defend a lot, and I really mean that the best entries are trend-based entries. Of course, breakout entries are also good, each to their own, but definitely trend-based entries are giving me the best chance to trade it. Can you show us historical versus now moment? Of course. Before I do that, Bando is saying hi. Christian is asking, are Elliott and Wolf Ways give the same direction? No. Christian, they are connected in some sense, but they are different. They're different. Wolf waves and Elliott waves are different. Okay, let's see the question. The question was, okay, no. Can you show us historical versus now moment? Okay. For example, we can take euro-dollar pair. So here, guys, you need to zoom out. You need to zoom out. It means that you go to, let's say, daily time frame and watch for some possible price points. You can mark it on your chart like this. For intraday trading, you go to, you can follow close history. 1 hour or 4 hours is enough. Control and Y, and here you see quadrants. So mark the quadrants, guys. 1, 2, 3, 4, 5, 6, 7. You have a lot of quadrants here. You can mark it here. You can mark it there. Something that is very obvious. mark tops and bottoms and follow the price in real time. This was yesterday, okay? Actually, this price action was from yesterday. So you see 133.39. Probably in the past, if it's not historically written level, there was some nice price action in the past, in the history. But if it was for, see guys, here on weekly chart, we can identify this as selling point. Here, this was bullish order block. Here, the price actually was sold from this level. So that is not just a coincidence that 33.35 is strong support, because in the past, okay, we saw a lot of movement at that price. So in order to assess history, you need to zoom out, you need to watch the price. For intraday trading, sometimes these quadrants are simple enough, because guys, if we saw, this is dark cloud cover here, okay, dark cloud cover. So if we see a confluence with this pattern here in next few days, I assume that 1.0590 will be sold, okay, if that happens in next few days. So what I do is, for intraday trading, I simply watch previous price action movement, these quadrants, guys. I mark these quadrants. I show you that on the first price action trading school. So I just mark low, high, and important swings. If I don't see any historical price action in now moment, then I zoom out to 4-hour time frame and watch also near-term history. If I don't see any history there, I watch the daily time frame. But usually I will spot it, because price action in Forex is about repeating patterns, guys. Repeating patterns. Do you remember when we had a webinar about patterns where I said that 1, 2, 3, 4 pattern is one of my favorites? Yes, guys, we will also do 1, 2, 3, 4 on live trading. So that is when history repeats itself. Price action is God in Forex trading, in my opinion, literally. In my opinion, there is nothing better than mastering the price action. So this is really where it becomes tricky and interesting. When you see it, for example, that when you notice that there is a confluence here, let's say quick euro dollar. This was the high, this was the low. This was stop hunt here. This was also some sort of breakout to downside. Now we would safely assume that around these levels we can find confluence points. So next time, probably tomorrow, this will be different. So I would be searching for short entry opportunities in between 0.70 and 0.85 on euro dollar. Definitely, guys. Next time price hits this level, it will be sold. I don't know how much, because we need to assess targets. We are not moving the markets. We are speculating. So, but having a good entry is always, it always comes first in my analysis and my trading. So here I would definitely look for important rejection zones. First, because we have historical selling. This is double top here. Then dark cloud in the zone. We also have 78.6. Probably H5 or some H level will be also in next few days up there. So you see, it's not hard. You just need to watch price action. So whenever you see that price has rejected or bounced from a certain spot in history, mark it down. Those spots are usually highs and lows and swing highs and lows. So in near-term history, this level here is historical resistance. This is historical support. And if it happens in near-term trading that price gets here or there, this will be another part of Confluence to look for entries here and there. It's very important. And I know that a lot of analysts and traders simply don't follow it. That is unfortunate. Christian is asking, will you have Elliott session? No, Christian. Chris is doing Elliott wave trading and Elliott wave analysis. So Chris is a man for Elliott. I personally am more a price action trader, and I follow price action religiously. So Elliott ways, it's best to ask Chris, of course. No problem. Should we always use, yeah, okay, next question. I'm not clear with ATR. I didn't understand this question properly. Well, I'm not clear with ATR. Please take a look at previous ATR recording. You can find it on Price Action Trading School webinars, guys. I explained already what ATR is used for and what why do we use ATR and what are the benefits of ATR indicator. So please take a look at that webinar. Here you can find it on Admiral Markets channel. Okay, search for ATR webinar and you will find it. Quick explanation, ATR gives you the range, expected price range, expected range where the price will move. It projects highs and lows. This is high, this is low projection. Usually when ATR 14 is overshot, we might start searching for counter trend opportunities. So that is not just coincidence that we see rejection from H4 here. It's very clear that ATR is overshot, 102 versus 94 for last 14 days, and it's resistance. So ATR is very important in my analysis, and I will use it heavily during live trading also, and I also use it here, guys. You see this is head and shoulders, SHS, bearish SHS pattern. It's head and shoulders, left, head, right. Okay, here the price could go down. So that is why you really need to focus on this price action patterns. It's very important. It's, for me, it's very, very interesting to watch these patterns. And yeah. Rolando is asking, Kai Nenad, can I request your ATR indicator? Rolando, just send me an email. Okay, just send me an email, and of course you're free to ask for. So my email is tarantulafx@gmail.com. So just send your request to me. Okay, so this was it. We could see some rejection here. ATR overshot. I mean rejection until new day starts. So today we still might see some rejections of this spot. I mean, the only thing is that it can spike up and then again reverse down. But I'm not recommending any trades now, guys. It's end of day now. Okay, it's end of day. And also, guys, there is FOMC meeting later. Don't forget, market is waiting FOMC. But if it was for normal trading conditions, I would say this could be potential counter trend trade here. Okay, so ATR is very, very, very good, and in short, it plots projections of previous average range of 14 days, and it plots projections of highs and lows. So we will use it, and it's used extensively in my trading and analysis. Should we always use ATR 14? That was the question. Well, the answer to the question is I use it. I use it. I always use ATR 14. So for intraday trading, I recommend it also for you. Shazad is asking, what do you mean with ATR overshot? What is good ATR? Shazad, ATR is average true range. It changes each day. So if you see here, for example, 94, and here is 102, it means that ATR has been overshot. So the price has already went above its ATR, It went too much to the upside now because projection was 0.484 to the upside and the price went to 0.491. Also resistance here. So it means that ATR has been overshot. So it diverged from its mean from 14 days. So we might say that probably there could be some short trades in now moment. There is no good or bad ATR, Shazad. There is no good or bad ATR. The primary thing is it shows you price projection high and price projection low. When ATR is close to price projection or when it's overshot, it tells you not to trade in that direction. So I would not trade to the upside euro dollar. Whatever the case may be, now I would never put any long trade on euro dollar because ATR was overshot for 8 pips. See, 94.102. This is today ATR. This is average ATR for 14 days. It's been overshot. So probably a short trend opportunity. Of course, if we didn't have for FOMC and if it was for normal trading conditions, I would say now, okay, we could go short if the market was active. Ali is asking, hi Nena, this short on euro dollar still a good setup? I would not place any trades at this point because we have FOMC. But Ali, you should have traded it today because Australian dollar exactly rejected where I said from this spot. This was megaphone, okay, and it still is megaphone pattern. So it's a bit tricky. You see here, it made 23 pips rejection. It's megaphone, so it's tricky. So be very, very careful about it. Okay, so it was a bit tricky. It might reject again, but it already rejected from my POC zone, POC to the upside. So you see, it rejected then, it gave you some profit, but now you can try only a small scalp, keeping stops above this level. But I would be very careful because there is not a movement now, and FOMC is in 1 hour and 30 minutes. So we should see some there could be some movement during FOMC. Okay. You see also today's ATR 69, average to range 59, so it might reject from these levels indeed. Do you use candlestick for entries? No. Particularly, I could use it only if I see a terminal bar rejection on harmonic pattern. So if we see a setup on harmonic pattern, then we would need to use terminal bar to actually give us the entry. So that is the only thing. Another exception is my own T89 pattern. Sometimes I might use T89 pattern for entry. So the answer to this question is sometimes yes, but not very often. Only for harmonic, let's say terminal bar, but I trade harmonics very rarely. Mostly I watch it and compare it to my own analysis. And what I use more is T89. It's not that often because I mostly use it for Confluence, but still I could use T89 as an entry. Rejection candles are my favorite candles. So pin bar rejection, have in mind that that is my absolutely favorite candlestick, pin bar rejection. When is Pet's live trading scheduled for? That was also a question. It's still not scheduled on Admiral Markets website, but I will schedule it for February. So expect live trading to be scheduled from mid-February. Bando is asking, can I find lessons in YouTube? Of course, here is YouTube. And okay, I will show you now. You can actually, you see, this is the channel. Price Action Trading School channel. Here you can find Price Action Trading School lessons. Here. So guys, feel free to invite your friends, acquaintances, relatives, I mean people who are not familiar with Forex market. I want honestly to present them Forex market, and despite all opinions, Forex trading is profitable if you know how to do it, especially if you don't take every single chance market is providing you. Then you should be profitable. You need to assess which chance is the best to trade. So guys, this was it. These were the questions that I received on email. I also answer some live questions here. So you can contact Admiral at +440 277 26 4003. You can send an email at helpme@admiralmarkets.com, YouTube Admiral Market channel, and follow Admiral Markets on Facebook.com. Expect session recaps as always on Mondays, guys, and really I'm inviting you now to sign up for session recaps. Guys, definitely sign up for session recap webinars, because it's also a form of live trading. I am giving you setups that are valid for next 2-3 days. So here if you go to webinars and education, okay, sign up for next session recap webinar. Okay, here just press join webinar and then sign up. You will always have the best setups, analysis, and you can also ask questions. So that was all for me for this price action training school lesson. So you actually might expect that we finish with our price action training school before we start to live trade it. So I expect, as I said, I expect live trading on in February, and you will see it scheduled on Admiral Markets website. Bogomil is asking, will it be live trading available for Admiral Markets clients only? No, guys. Live trading will be available for everyone. So everyone is free to join. But I really advise you to trade with Admiral, because guys, I also have money there and I also trade with Admiral. I mean, you know, the platform is great. It's working perfectly. People are always willing to help. So definitely, guys, I would like to see you there also with Admiral platform. We also use Supreme Edition, which is exclusively available to Admiral Market clients. And really, you should be safe. Really. So don't worry about it. Thank you, guys, for your questions. You will also see me opening live trades on my live account during live trading course. So I mean, I really advise you to open Admiral Markets accounts, fully regulated company. I mean, I personally would never ever place my money on broker that is not regulated. So that is really a big insurance to you to know that I also trade with Admiral. So yeah, the question, I also have a lot of questions concerning US traders, like when people from US will be able to trade across US, I mean outside of US. Well, I think that if you have dual passport, you can trade it. But if you are a sole citizen of US, you are not able to trade with any regulated European Forex broker, because I mean, no one wants any problems with US regulator and government. So unless regulations in US change, at this point there is no way to trade unless in my opinion, this is not official opinion, I still don't know about official, But maybe if you have dual passport, maybe then you can trade it. But as I say, I'm still not clear with it because we really don't accept any US clients. And there is no regulated broker that should accept any US client, because guys, it's different regulations to US citizens, especially about taxes. You also, US citizens also have first in, first out rule, leverage is 1 to 50, and really regulations are different. So at this point, there is no, unfortunately, there is no way for US traders. But if something changes, guys, you will be the first to know. I can promise you that. So thank you for your questions. Thank you for your comments. I will be here with you tomorrow with Chris. And don't forget to sign up for more webinars and follow the analysis each day on Admiral Markets website. Okay, guys, so have a great day. Watch for FOMC and talk to you soon. Cheers, everyone. Trade safe.